Hi friends, welcome back. I want to give you an update on the stocks and financial markets today. I'll share my thoughts and get yours as well. So first, this is a comment coming in from community. This is from Sam. Sam writes, all of my coworkers are currently fawning because one of them just got a new to them Corvette, not Cybertruck, Corvette. Now, maybe this was their life's dream to have a nice sports car, and I don't want to take that from anyone. But it's hard to find people where I'm at with any aspirations beyond spend, spend, spend. So I really appreciate this channel and love the perspective. So do appreciate this comment, Sam. I like to have these conversations with you. And my initial response is basically buy things that go up in value. Don't buy things that go down in value. A sports car or something like a Cybertruck, those go down in value. And also with depreciation, you have insurance. You have maintenance, gas, tires, whatever. And it's basically, I'll just tell you the truth, a black hole that sits in your driveway and you dump money into it. And it's the same way, like I had a friend who tell me this a long time ago. And he's like, because I was thinking about buying a boat. And he's like, don't buy a boat. I had one. It's just a black hole that sits in the water that you dump money into. And so, when you start to think about this stuff of like, oh, I could use my money to actually grow my wealth, grow my account, opposed to, use money to buy things that then deplete my account. It kind of changes your perspective when you think of it that way. And so one of the lessons I just want you to be thinking about when we go through, markets all the time and all the news is how can you find sustainability and how can you find growth? And that's sort of what we're talking about. So take a look at this. This is the chart of what's up in the markets today. Most things were red, as you can see here. There are a few green spots. Basically, you have NVIDIA that's the CEO's out hyping everyone saying, oh my God, the demand is through the roof. We're still selling a bunch of chips. Whether or not that ends up being the case, we'll see. But that's what he says. I think he said demand is insane. If you look at, say, like Tesla was down quite a bit. They had a disappointing deliveries. Also, too, the car market looks really, really weak. And essentially, will people have money or even the willpower to want to buy said cars from Mr. Musk? Then you had energy stocks up, and essentially what's going on there is that you have war tensions in the Middle East. So unfortunately, the situation keeps getting worse there. Basically, right now, we're waiting to see what's Israel's response to the recent attack from Iran. At the moment, it looks like that this is just kind of I don't know if call it rumors or threats, however you want to say it, is they may be targeting the oil supply and then of Iran, and whether or not the USA will be involved remains to be seen. So that's sort of what's shocking the markets. And essentially how this whole thing works is people are looking for places to grow their money and also look places for, money to be safe, right? You don't want to lose money. No one wants to lose money. And so if it looks like that there could be war, if it looks like the oil prices could go up, that sort of changes the equation of everything. And then people start basically selling off, which in many cases are overpriced, or overvalued assets, like say it's something like a Tesla. And like, you know what, I'm just going to hold cash. You know what, I'm just going to buy bonds. You know what, I'm just fine getting anything else but, risky things. And essentially, we're really concerned about growth around the world and sustainability. I'll give you another example. Jobless claims were up. So essentially, more people are losing their jobs. And this is something that I've been talking about all along, guys. You got to keep an eye on this job stuff. It matters. Because why? So let's use the example of Apple. We can talk about Tesla. We'll use Apple's example here. Apple's a company. You can buy their stock. And when you buy stock, you take ownership. And the question would be, okay, if I buy stock and take ownership of a company, is that company going to make money and are they going to grow their earnings? So if they come out with a new product, say an example, the iPhone 16, will customers show up at the door? So we look at, say, on the channel, we look at, say, what's the product? Do people want to buy said thing, right? Also, we look at, do people have the ability to buy said thing? Is there money out there? And when I look around the market and I say like the new iPhone, I don't need it. It's a nice phone. We saw it. I told you the other day, we saw it in the store. It's a nice phone, but I have a 13, which is completely fine. And my wife's like, we'll probably get the 17. That's what we were talking about. Because it's fine. I don't need that new thing. The same way I don't need to buy a sports car. We have the ability, but do we need it? No, not really. Now there's some people that say they need to buy the new thing every year, right? But they've recently lost their job, so they would like to buy one. They were planning on buying one, and maybe they have the iPhone 10, and they're like, oh my God, I need to upgrade, but they just don't have the ability to get it anymore because of their job situation. And that's sort of why you track these numbers. How many people are in that situation where it's just not feasible for them to buy a new phone? Then you want to look at, and this is sort of why we talk about the news all the time, is it easy to get money or difficult to get money. So that's why you track what the Fed is saying. So the Fed, that's the central bank here in USA, they're saying here, this is from Goolsby, and they'll have comments, every couple of days or so. Fed Goolsby says inflation is coming down and close to target. Unemployment has come up, right? So unemployment going up a little bit. And the job market is basically where we would want it to be. Rates need to come down over the next 12 months by a lot. And it's interesting when you try to parse through their language, you're like, okay, so what are they saying? And generally when they say stuff, they don't want to freak out everyone. But at least when the way that I read these things, I can see that he acknowledges that joblessness is going up. We see it also in the numbers. Then he's saying we're cutting by a lot, and then they try to make you feel like everything's fine. And now what's strange about this stuff is that if rates are historically are kind of not that high, if everything's fine, why do you have to cut by a lot? That's always the question. And the issue I think is I mentioned before, I think we have a growth problem on our hands. Be it what's happening in USA, be it what's happening in China or otherwise. So for example, talking about China, let me guys show you this chart. This is an interesting one. This shows you sort of like where could growth be around the world, right? Just for kind of comparisons. This is coming in from the IMF, so the International Monetary Fund. They're saying like growth around the world the next 5 years. China will be basically a fifth of that, 22%. India 12, about 12-13% of that. USA 11% of that. Indonesia, Germany, etc. You can see the numbers right here. But essentially, if the USA and China are experiencing growth problems, and much of our growth comes from those two countries, what does that say about the world? This is sort of why we talk about this stuff. Because a lot of these things, like just for example, let's say in the iPhone situation, the United States is like, okay, we're coming out with this new thing and we're going to try to, sell it to a bunch of people. And let's say they sell a whole bunch of things. Then suddenly maybe everyone in work in say Vietnam has work because their factories over there need to build new iPhones, or say everyone in China has work because their factories over there need to build new iPhones, et cetera, right? So it's a sort of understanding that, who's producing these things, who's buying these things, who's profiting off said things, how much other profits, et cetera. And this is sort of why I try to give you guys realistic estimates on this kind of stuff. So for example, I understand and I'll show you the chart here, like say on the Tesla situation, I understand that like, Tesla is a really, really popular stock and everyone's saying how awesome the cars are, et cetera. But guys, like when I look at the news every day, say for example, today it was Cybertruck has another recall. I think that's like the 5th recall in 12 months. It's something like that. This time there's some sort of problem with their rear cameras, like you put it in reverse and then the camera cuts out or something for a couple seconds. And those couple seconds could be crucial, right? Basically, it just doesn't work. It doesn't work the way it's supposed to, so they did a recall on that. And when I see this kind of stuff, I'm just like, okay, as a regular consumer, do you want a product that doesn't work, right? That's had like 5 problems in the last year. Is that something that you want? Plus it's overpriced. And so then it goes back to, do people have jobs to buy said things? Are people like, just swimming in money to where they can waste money on said things? Or are they more cautious, right? And so from the things that I can see with the war tensions in the Middle East, with the current Fed banking policy, with the jobs, I just feel like people are going to be more cautious. And, do people want to spend, double, triple what they need to say buy an electric vehicle when they can just buy a conventional vehicle for much, much less to get them to where they want to go, or don't buy a vehicle at all if their current vehicle works totally fine. See, you guys, how this stuff all fits in. And so then it goes back to, okay, so where can I grow my money? I know when you watch a lot of other channels, they basically say, guys, this is the hottest stocks. You always got to be buying stocks every day, and you're going to make money all the time. And I just tell you the truth and stuff. So, yes, you can buy stocks and totally do, right? You do want to grow your wealth, right? But it doesn't mean that's the only place to put your money. So think about, okay, where can I pay off some debts? Where can I put money where it's going to be like, say, fixed? I have no troubles. That'd be like a CD, savings account, say, for example, like it's not going to go down. Or can you get government bonds, which are also good? Me myself, we literally do it all. Just change an allocation. So if I feel like things are too risky out there, there's less money I want to put in the market and more money I want to put in is like, you know what? I'm fine with the CD that just gives me 4%. Just give me that 4%. I'm fine. I know I'm not going to lose. I can sleep well at night. Sometimes, yes, I'll want to play the market for sure. I play the market because it's a variable risk. Markets can go up, 10%, can go up 20%, could go down 10%, could go down 20%. And you have to ask yourself, what do you feel comfortable with and what is your time horizon? And guys, I can't manage your individual accounts. I don't want to. It's too much stress for me. Because I just don't want to. I don't want people calling on the phone going, "Hey, what's my money doing? What are you doing with my money?" Like, and that's essentially what a money manager is. But what it can do though is give you honest and realistic views about the economy and stocks, etc. So I try to do that every day. What else have we got going on here? Talking about realistic stuff. I guess OpenAI, they just raised a bunch of money. I told you guys that before on the channel. And it's funny because they told investors, is a true story. You can, invest in us, but don't invest in another company. It's like, what? So they're kind of trying to cut off the competition, I guess, before it even starts. It's kind of interesting. And then it turns out too, I guess they're borrowing a bunch of money from, they're getting a line of credit. It's like multiple things. It's like Citibank, Morgan Stanley, Wells Fargo, UBS, HSBC. They're all jumping on board with this thing. So who knows? So there's that. And then sort of what's been going up, you have the oil stocks because it's like, fear of the energy crisis if the oil supply goes down in Iran. And then you have Jensen Huang, the CEO of NVIDIA. He just tells people that like everyone is insane for our products and we're all going to do awesome, talking about the AI chips, and then just like 30 to 40,000 a pop. And that's the question. Will that AI demand continue? And that's what's moving the market. So love to hear your thoughts on any one of these stories. Do appreciate your time. And I'll catch you on the next video.